Roads, schools, airports, hospitals, government subsidies, and even streetlights. Have you ever wondered where the bulk of the money for these important public goods and services that we enjoy comes from each year? The answer: taxes. Yes, every country needs taxes to keep itself going. But what exactly are the taxes found in Singapore? Corporate income tax. Corporate income tax is the biggest contributor to Singapore's tax revenue. A company is taxed at a flat rate of 17% on its chargeable income. This means that for every $100 of chargeable income, $17 goes to corporate income tax. However, the amount of corporate income tax payable may be reduced, such as by tax exemption, tax incentives, and tax rebates. Personal income tax. The income we earn in Singapore is chargeable to personal income tax. Such income includes your salary from employment and your bonus. For the self-employed, such as taxi drivers, hawkers, and commissioned agents, the income from carrying on their trade or profession will be chargeable to tax. Some of us also have income coming from other sources, such as rental income, which are also chargeable to tax if they are earned in or derived from Singapore. The amount of tax that we pay may be reduced by tax rebates such as the parenthood tax rebate and personal income tax rebate. Personal income tax rates for resident taxpayers are progressive. The first $20,000 of your chargeable income is tax-free, and the next $10,000 taxed at 2%. The tax rates increase up to 22% for chargeable income in excess of $320,000. This means that a person with a higher chargeable income will pay more tax and at a higher rate than a person with a lower chargeable income. About 50% of our workers do not pay personal income tax, and the top 10% of taxpayers account for about 80% of all personal income taxes collected. GST. GST is a broad-based tax levied on the consumption of goods and services within Singapore. The current GST rate here is 7%. This will be raised to 9% sometime from 2021 to 2025. For most items that we buy, GST is typically already included in the advertised price. GST on imported services including video and music streaming services, apps, software, and online subscriptions will take effect from January 2020. In Singapore, for the less well-off, they can enjoy the GST voucher payouts each year, which helps to cover some household expenses. GST on subsidized healthcare and education is also borne by the government. Property tax. Property tax is levied on property ownership in Singapore. It's applied on all properties such as residential, industrial, or commercial properties. It is also applied regardless of whether it's rented out, owner-occupied, or vacant. For residential properties, property tax rates are based on a progressive scale, with higher property taxes for higher value properties. Also, the property tax rates are higher for non-owner-occupied residential properties, such as those let out or left vacant. For commercial and industrial properties, property tax rate is a flat rate of 10% of the annual value of the property. Stamp duty. Stamp duty is a tax on dutiable documents relating to any immovable properties in Singapore and stocks and shares. One common example where stamp duty applies is when we buy, sell, or lease a property. For instance, for purchase of immovable properties, the higher the value of the property, the higher the stamp duty rates. The stamp duty rates range from 1% to 4% for residential property and for 1% to 3% for non-residential property. Also, additional buyer stamp duty may apply for purchase of residential properties, depending on the profile of the buyer and how many residential properties the buyer already owns at the time of purchase. Betting taxes. Betting taxes are collected from promoters authorized to operate betting and sweepstake activities in Singapore, as well as from clubs or societies conducting private lottery and operators of the casinos. Taxes. They are a fact of life. But the spending on essential public goods that keep Singapore running smoothly is only possible because of the revenue collected from these taxes.